This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. We do it all right here on Bloomberg Businessweek Daily. Massar along with Tim Stenovec. Yes, it is Wednesday, February 25th. State of the Union, it is done.
Okay, check. Yeah. Nvidia earnings after the close.
That's a big deal.
That's a big deal. Nvidia's higher right now by close to 2% on the day. We're also seeing some buying when it comes to equity markets, with the NASDAQ composite up 1.2%.
It's interesting to see that enthusiasm, I should say, ahead of those results, because this is going to be a big deal. I mean, there's the expectations around AI, and we'll see. It feels like investors right now, in terms of AI, their excitement over it kind of intact at a time when the AI scare is real, no doubt about it, and it definitely impacts the trade. But we'll see what Nvidia says, and is a meet in terms of the forecasts and the expectations enough to get some momentum in the stock, because the stock hasn't done a lot this year.
It hasn't, and that's the backdrop of what we're spending time on for the 2 p.m. hour today on Bloomberg Businessweek Daily. Also taking a look at the economic effects, or at least the market effects, from the president's speech last night. You see home builders are lower. Expectations were maybe some sort of policies that would benefit them. But instead, the president saying yesterday, again, reiterating he wants Congress to act when it comes to institutional ownership of single-family homes.
I thought it was interesting. There was a lot of analysis saying that there was a lot on the economy. I felt like there could have been a lot more in terms of specificity. So we're going to see what Pimco's Libby Cantrill has to say about it, and really kind of get to her in terms of what policies and actions could be coming that will matter to the U.S. economy and business environment. Also, we have a question. What exactly is the state of President Trump's economy?
Yeah, hopefully we'll get an answer to that. We're still trying to figure that out. Also, the CFO of the e-commerce firm MercadoLibre joins us on AI and going up against Amazon.
The behemoth that's out there that continues to expand globally. And yes, what to watch out for Nvidia. We haven't forgotten. We're going to get to that as well. First up, though, let's get a check on that trading day. Here is Charlie Pellet.
Hi, thank you very much. Keeping an eye on a developing story at this hour. Now, CME says Globex markets, natural gas futures, and options markets have been halted due to technical issues. The development comes after a glitch earlier this month caused a brief halt in nat gas markets near the close of trading. And by the way, CME is now saying on its website that all day orders and GTDs with today's date will be canceled. Stocks higher right now as traders brace for Nvidia's numbers after the close of trading. Nvidia shares are pushing higher, up now by 2.1%. Yes, it's the report, but also how it will ripple through markets after we get the numbers. Again, Nvidia ahead of earnings up 2%. Also after the bell, we'll be hearing from Salesforce. That stock up now by 3%. S&P is up 0.8%, higher by 53 at 6944. The Dow up 0.6. NASDAQ up 1.3%, and the NASDAQ 100 index up by 1.35%. The VIX at 18, the 10-year 4.04%. Spot gold is up 1.1%, 52.02 the ounce. And Bitcoin, big story there, surging 8.1%, 69,258 on Bitcoin. Earnings news. Lowe's is out with sales guidance for the full year that fell short of expectations. Lowe's shares down now by 4.4%. Rival Home Depot also lower, down by 2.4%. And TJX, that is the parent of TJ Maxx and Marshalls, that stock down by 0.6% after earnings. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, Tim and Carol. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to talk a little bit about Nvidia. As you know, as Tim mentioned, the stock is up about 2% ahead of earnings. Those are earnings coming after the closing bell today. It is the most valuable market cap company in the world. Those results after the close really coming at a critical time for the U.S. stock market, with investors increasingly nervous about that AI trade and the outlook. How does it impact us? How does it impact companies? So we should point out investors are expecting some pretty strong results from Nvidia. Uncertain, though, about how its shares will respond due to fears about that AI disruption and heavy investments. As Tim and I have been talking about, right, Tim? I mean, stock hasn't really been going anywhere.
It hasn't, and it needs a blowout report. But I feel like we have this conversation every quarter, and then the company delivers. So let's bring in Ian King. He's Bloomberg News U.S. semiconductor reporter. He joins us from the San Francisco bureau. It's always a highly anticipated report. It feels, I got to tell you, it doesn't feel like this one is as highly anticipated as it's been in recent quarters, Ian. Am I just getting the vibes wrong?
Or jaded?
Well, that's, yeah. No, I mean, you're right. And that's because a lot of the notes and a lot of what the investors are saying is like, NVIDIA's pretty much told us all we need to know for the time being. Yeah. We're looking for them to tell us something new. You know, just to remind you, they've said demand is off the charts. It's great. They've talked about new products coming that are wonderful. So that, you know, they've already addressed the sort of things that normally this kind of state of the union for the AI industry would normally be focused on.
But, Ian, are they right? Like when they say that, and as they've said it in the past, and we kind of hear the same message over and over, and the enthusiasm from Jensen, are they kind of right in terms of demand off the charts, and so they benefit?
I mean, you can't argue with numbers, right? A company at this size, growing at this particular rate, at this level of profitability, 75% growth margins. I mean, for any other company, arguably in the world, never mind the tech industry, this would be, you know, high fives all around. But for these guys, it's become, you know, another day, right? Another dollar for them. So that's, whether that's fair or not, it doesn't matter. But this is an enormously valuable and an enormously important company. So this is the reality they have to live with. So tomorrow, anything less than a beat, anything less than $2 or $3 billion more than what Wall Street is currently expecting won't be good enough.
So you, in your great preview, you talk about, Ian, that revenue for NVIDIA expected to jump 68%. Adjusted earnings are anticipated to rise 72%. So meeting those expectations, is that enough to get this nearly $4.8 trillion market cap company moving, or it has to be better than that?
Yeah, I mean, turning back to what Tim said in his opening remarks here, what happened 3 months ago? We beat. We were 2 or 3 billion ahead of where we said we were going to be, and then the stock went up a little bit, and then the following day it was down, right? Because it wasn't enough, and that's just the reality of where this company is in terms of expectations. But in terms of operational, it's hard to argue with those numbers.
If you look at the first quarter estimates, the revenue estimate, $72.78 billion, adjusted gross margin estimate of 75%, CapEx estimate of $1.65 billion. It's so quaint when you look at a $1.65 billion, CapEx from one of the Mag 7. So that's interesting. Which number is the most important? Is it gross margin? Would that tell us the biggest story?
I mean, the revenue projection for the quarter is going to be very important. There's a lot of concern around gross margin, and has been for a while, because, as you know, there are shortages out there. Can this company get enough supply of things like memory chips, of its outsourced production from TSMC, which is why its CapEx is so low? Can it get enough to meet the upside, or is it going to have to pay more to meet that upside and therefore crimp its margins? But frankly, 75% gross margins, that's a software margin. That's not a hardware maker margin. That's way above where the rest of the industry is.
It's all just quaint, right? With quotation marks around it when it comes to NVIDIA. What about Blackwell? What about the upcoming Rubin chips? What do we need to watch out for there? And what about China? How important is that in terms of commentary around that?
Yeah, I mean, the new products is something that they've actually done more in terms of talking about them ahead of time. The GTC conference is coming up in the next couple of weeks here in the Bay Area. That is normally the focus of hey, look at the new great products we've got. So they've kind of front run that. So there's a little bit of like, what more can they say? Maybe there's a new product, something we haven't thought about that's coming at GTC. So there's that expectation that exists. And really that, I think, but China is another big area which we should probably discuss as well.
Yeah, well, let's hear it, Ian, because this is sort of like, I mean, it's hard for me to keep track of what the company is and is not allowed to sell to China, and the understanding the effect of that and what that means, not just for NVIDIA, but what it means for what China can do, at least when it comes to this arm race, is, I think, a really important discussion.
Yeah, I mean, it's my job to keep track of it, and it's difficult, right? Because fundamentally, Nvidia and its rival AMD are not allowed to sell their best products in the largest market for those products, China. That is an ongoing, giant problem that both of these companies have, which they've got over with by growth elsewhere. Eventually, so investors believe, something has to happen. They either have to be allowed to do business there, or it will have a fundamental impact on their business and their growth and what they are as companies, what they can achieve. Right now, it's still up in the air. We've got signals from the Trump administration. We've got mixed signals from Beijing as to whether, even if orders come from China, they'll be allowed to fill them.
Before you go, we'd be remiss not to ask you this, Ian. Meta and AMD, we've talked a lot about your reporting yesterday on this deal to spend billions on AMD gear and plans with conditions to buy stock of AMD or shares of AMD. What's your read on this, or what should be our takeover as we get ready to get a report from Nvidia?
Yeah, I mean, you remember Nvidia had its own announcement with Meta more than a week ago. Yeah. The bottom line here for AMD is it's an affirmation of the viability of its technology going forward from one of the largest purchasers of this type of technology. So all good there. In theory, this could change AMD in terms of what we think about it, catapult it to an unprecedented level of scale that many thought was just not possible for this company. All of that is good, but the flip side is obviously the concern about what exactly does this potential for Meta to become a shareholder. Why was AMD forced to do that? A lot of questions were asked to Lisa Su and the management about that, and she sort of answered them and diffused some of those concerns, but that is adding to this overall sense of fragility about where all of this growth is coming from.
Kind of crazy. Hey, listen, by the way, and for the record, we're so glad you keep track of all the particulars, because that's why we come to you, because we know we get the latest and what we need to know. Ian King, thank you so much. We'll be looking forward to your reporting after NVIDIA reports after the closing bell. He is Bloomberg News U.S. semiconductor reporter Ian King. All right, NVIDIA after the closing bell. That's our look forward, but we do need to talk a bit more about last night. Yeah,
the State of the Union, our look back. The president returned again and again in his speech to the same message on the economy. Everything is going great. What is the reality of the U.S. economy? It's a question, though, that we wanted to ask. And for that, we turn now to Bloomberg TV and Radio international economics and policy correspondent Michael McKee. He joins us here in the studio.
He's our get real person.
He is. Well, so let's start with just an easy one. President Trump said inflation is plummeting. Incomes are rising fast. Is he right?
No. Incomes are rising faster than inflation, but that's been the case for a while.
Okay.
The inflation rate when he took office was 3%. That is a CPI number. It was a little higher than that in the PCE. The CPI number came in at 2.4%, so you could say inflation's come down, but we know the CPI is distorted. And we know that the PCE inflation rate went up to 3% this past month. So really, inflation hasn't changed on his watch. It's about the same now.
Is it likely to change in terms of what he might be pursuing for tariff policy now? I mean, it's a little confusing in terms of what we keep hearing. And I think we heard from, Jameson Greer about what he's expected to do to hike tariff to 15% where appropriate. This is obviously the U.S. Trade Representative. So should we assume that that's going to continue to impact inflation and provide inflationary pressures?
Well, it's definitely going to impact the confusion about what's going to happen. If they drop it to 10 or even 15%, it brings down the average tariff rate by a few percentage points. So in that sense, it could be somewhat disinflationary from where we are. But because they're going to impose on top of that the Section 301 or 232 tariffs, once they get their investigations done, then those could be even higher. The president's threatening to make them higher. We'll see where they come down on these things. So you could end up with a higher overall average tariff rate that would push inflation up. The question then becomes, when does all that hit? And that's the thing. And companies are already having to raise prices. We've seen a lot of anecdotal reports on that. And they're not going to lower prices now, just because you go down to 10 or 15% from maybe 20%. They're not going to lower prices that they are charging. They're going to wait and see what happens.
Right. Hey, we need to, one of the things, obviously in the State of the Union and geopolitics came up, but we do have some headlines crossing the Bloomberg right now.
Yeah, just want to mention, this is a Bloomberg. Bloomberg News is now reporting that 4 U.S. speedboat passengers have been shot dead. That's 4 people dead in a U.S. speedboat. This according to the Interior Ministry. It's a headline that we're going to keep following. We'll bring you any updates as we do get them.
Yeah, just one headline there, but we'll continue to monitor. Back to Mike we go, who follows, of course, international economics and policy. So in terms of affordability issues, Mike, how do economists measure this correctly? And he seemed to be the president, or at least analysis, that he was kind of dismissive with it. Like, we've got it. Democrats, this is something you bring up. I don't want to get into politics, but how do you figure out affordability in America?
Well, it's not a word that has an exact definition. Basically, it comes down to a little bit less of the CPI and the fact of how fast inflation is rising, which is what economists tend to focus on. And it's more about how people feel about the prices they're paying, which has more to do with the level of prices. And while we've seen the price of eggs come down, as the president talked about, they're still significantly higher than they were. So people go to the grocery store and they're looking at their total bill and they're saying, this is a lot of money. They're not saying it's maybe only 2% less expensive than it would have been or something like that if we'd had the same inflation rate. So the problem for the president last night was in claiming victory over affordability, he's not addressing the real political concern that people have. There's a certain point to the fact that he cherry-picked a bunch of numbers in terms of prices, and some have come down, but some have gone up. And as we've seen, the PCE prices are still higher. So he's going to have a hard time selling that one, I think.
Every president has a hard time selling this. I mean, we saw this with the Biden administration, too. I mean, you can talk about how you can point to data, but you can only jawbone so far.
Well, go back to George H.W. Bush in 1992 against Bill Clinton. We were seeing inflation and we were seeing a slowdown in the economy. And he had a very hard time articulating the fact that he understood that to people. They saw him as a patrician East Coaster. And he lost the race to Bill Clinton with the famous slogan, "It's the economy, stupid."
Is it still the economy, stupid, when it comes to politics?
It is pretty much always and everywhere about the economy. The only things people really care about is what their lives cost them and whether or not you're sending their kid to war.
Before we wrap up, though, I think we're all thinking about now, we have a date to think about, and that's midterms. Is the economy that we have today, the Trump economy, that we can now call the Trump economy, right? He's been in office for a year now and counting. Is this the economy that will be there in the midterms, or what could change it dramatically in either direction?
Well, we're waiting for the tax refunds to come in, and they're supposed to be a little higher than they were. The question is, will people spend those and boost the economy, or will they pay off their bills? Historically, they've tended to pay off their bills, but we'll see what kind of goose we get from that. And then what happens with Iran in the sense of, does it affect oil prices or any other thing affect oil prices that would send gasoline prices higher, that sort of thing. It doesn't look like we're going to see major changes in employment over that period. Because of the uncertainty. Employers are going to continue to sit on their hands, and it's too early to really see AI impacts. So for now, this is probably what the economy is going to look like at the time. And people's views on the economy are kind of getting baked in. Charlie Cook from the Cook Political Report, talked to him yesterday, and he said, this is about the time when it starts to get too late to change people's minds.
Michael McKee, you rock. We so appreciate it. And we do want to mention that we mentioned Cuba shooting 4 people dead in a U.S. speedboat. Cuba's government says it shot 4 people dead and injured 6 in a U.S. speedboat after first receiving gunfire from the craft, according to the Interior Ministry.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Cuba's government says it shot 4 people dead and injured 6 in an American speedboat after first receiving gunfire from the craft. This according to the Interior Ministry and a statement published on state news outlet Cuba Debate. Now, the ministry says the Florida speedboat was in Cuban territorial waters off the coast of Villa Clara province in central Cuba. Again, developing story. We'll have more details for you as they become available. CME Group now says it has restarted trading on its main natural gas futures and options contracts after a brief halt due to technical issues. The Dow, the S&P, NASDAQ all advancing as traders brace for Nvidia's results after the close of trading. Nvidia up now by 2.3%. Salesforce will also be reporting after the close of trading. Salesforce right now up by 3%. But here's where we stand in terms of the equity markets. The S&P up 55 at 69.45. That is a gain of 0.8%. The Dow is up 0.5. NASDAQ up 1.3%. The NASDAQ 100 index, full of big tech names, up now by about 1.4%. The VIX at 18, the 10-year 4.04%. Spot gold up 1%, 51.95 the ounce. A retreat for crude down 0.3%. WTI 65.45 a barrel, and Bitcoin is now surging 7.7%, just above $69,000. Again, Nvidia coming up after the close of trading. I'm Charlie Pellet, and right now Bloomberg Businessweek continues. Back we go once again. Your hosts Tim Stenovec and Carol Massar.
Hey Charlie, thanks for that update. Just to hit on that story one more time. Cuba's government says it shot 4 people dead and injured 6 in a U.S. speedboat after first receiving gunfire from the craft. That's according to an Interior Ministry statement published on state news outlet Cuba Debate. The Florida speedboat was in Cuban territorial waters off the coast of Villa Clara province, the ministry said. People on the speedboat shot at Interior Ministry border troops as they approached, resulting in the Cuban boat's commander being injured. The injured are receiving medical assistance. Cuba says it is committed to protecting its territorial waters.
And as you just heard from Charlie, equities, we're not seeing too much movement, if any at all, in terms of the equity trade. Just looking to see if there's any market reaction. We're continuing to pretty much trade at our highs, certainly on the S&P and the NASDAQ 100. Well, as Tim mentioned, Cuba certainly on our mind at this hour. Geopolitics, some certainly mentioned in President Trump's speech last night. The president, in his State of the Union speech, focused on the economy, and his view included statements about what we just talked about with our own Mike McKee. Inflation is plummeting, he said. He said incomes are rising fast. And he also talked about Friday's Supreme Court decision that struck down the president's global tariffs.
An unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis. I introduced the great health care plan. I want to stop all payments to big insurance companies and instead give that money directly to the people. The roaring economy is roaring like never before. Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. Our nation is back, bigger, better, richer, and stronger than ever before.
All right, everybody. That, of course, was President Trump last night at the State of the Union address. We should point out his speech was criticized by Democrats, including U.S. Senator Elizabeth Warren, who said he had nothing to say about issues like capping credit card interest rates and making childcare more affordable. Let's get a policy view of last night's address from President Trump and what policies and actions that may still be coming that could impact the future outlook for the United States. Great to have back with us Libby Cantrill. She is Managing Director, Head of Public Policy for Pimco. She joins us from Pimco's offices right here in New York City. Libby, welcome back. Great to have you here. Let's just talk broadly about this speech. What stood out for you, and what do you think should stood out for the investing public, American citizens at large, the business community? And I think about American citizens who still think about this affordability issue. So what stands out on those fronts?
Yeah, nice to be with you. I mean, this was there was more performance here than policy, we would argue. There was a bit of a spiking of the football in terms of really sort of reinforcing some of what President Trump has perceived as victories, the one big beautiful bill, closing the border, some of the other kind of immigration policies that he has pursued, and also some of the foreign policy wins that he is characterizing, at least as wins. So I think that this was in some ways a lot of kind of red meat for his base, as these addresses oftentimes are. Now he did talk about tariffs, as you mentioned. I think that to the relief of many Republicans in that chamber, he did not call on Congress to take a vote on tariffs. I think that is something that probably would have failed anyway, but also would have been politically difficult for Republicans. But by and large, this was, I think, a pretty typical State of the Union address in many ways. It was, again, more of a rehashing of sort of the political wins and pretty light on policy details and light on kind of a roadmap, I think, for a lot of congressional Republicans heading into the midterms. Yeah,
I'm really glad you went to the midterms, because that's exactly where I want to go and try to understand from you if it actually moved the needle on how people could vote come the midterms, because that's what Republicans and Democrats are focused on right now.
I think it was a bit surprising that there were not arguably more policies that he'd actually highlighted in other speeches and other venues, highlighted in last night's speech. He did talk about this ban that he wants Congress to codify in terms of institutional investors investing in single-family homes, but he didn't really talk about some of the other proposals. To Senator Warren's criticism, she remarked that he did not talk about, capping credit cards and what have you. Now, I don't think any of those will actually get effectuated into policy. Those need Congress anyway. But in terms of really leaning into that affordability sort of framework and theme, he didn't really give Republicans all that much. Again, I think what his hope is, and what a lot of Republicans hope is that voters' sentiment around the economy will be different come this fall. Now, of course, that one big beautiful bill, people will be getting refunds on average, $4,000, about $1,000 extra in terms of a refund, relative to last year. So I think the hope is that there will be more optimism and that folks will have a different perception of affordability. And so maybe he won't need to lean into some of those policies. I think that was maybe last night was maybe a tell of that thinking.
Libby, he did focus on the stock market, certainly something we, focused on here at Bloomberg, but, talking about how good that was, right? And wealth created and good for our investors. But is that always a good read, or is that even a good read on kind of the state of the U.S. as a nation and as an economy?
Well, I think there are lots of examples where voters have one view of things, and the stock market is doing something different. I think if you talk to President Biden, I think that was one of his frustrations, and his economics advisor's frustrations is that actually the market was doing quite well, and the economy objectively was doing pretty well, but voters just didn't feel it. So perception is reality here, and going into these midterm elections, again, I think there is a hope that voters will feel better about things. And I think, to President Trump's credit, in terms of the Trump accounts that were codified into one big beautiful bill, this idea of broadening that out and giving folks access to retirement accounts who may not have access to traditional 401k. But so I think he is trying to tie the stock market performance to kind of everyday people's lives. However, we'll see. There's a lot of distance between here and there in terms of getting that actually effectuated into policy.
I think a lot of folks think, what a great idea, right? If we talk about wealth creation, this is a great way to do it. But I do also think about, how do we pay for all this stuff? And when do we think about kind of the fiscal house and when that's going to matter? I know go back a decade or so, and it was in every conversation I talked about here at Bloomberg, or even longer than that. Then it went away, and now it's back again. So I just think about, when do we have to when does that all come home to roost, or is it already?
Yes, I think if you contrast this speech with the speech last February, where President Trump was really leaning into this idea of DOGE and cutting federal spending and talking about the deficit, there was no mention of the deficit last night. And in fact, he talked about how important Social Security and Medicare were and how those would not be touched. As you all know, those are important programs. Bipartisan, wide bipartisan support. However, they're both very expensive as well. Our view here is that while there is no kind of immediate fiscal reckoning, I mean, the bond market, as you all know, hasn't necessarily, the bond vigilantes haven't necessarily come out here and disciplined Washington. But it's probably a question of, when, not if, that there will be an inflection point where members of Congress will have to actually do something in terms of sort of the fiscal trajectory. It doesn't look like it's close. There's not a lot of political appetite to increase taxes or reduce spending. But, our view is this sort of 6 to 7% deficits as a percentage of GDP. There will be a limit to that. And whether it's the bond market that is imposing that discipline, or when it's, Social Security Trust Fund starting to kind of go bankrupt, so to speak, which is expected to happen in the early 2030s. So we do think this is again, a question of when, not if, but it's just the when is probably not, under President Trump's term, at least as, if what the market signals are saying now.
Libby, you've seen different market cycles, different economies under different presidents. We've talked about this a little bit earlier with our own Mike McKee. How do you describe the Trump economy? Is it a good one?
Well, I think that, and again, there is a limitation to how much a president can actually impact the economy. So this is, for better or for worse, presidents, President Trump included, they like to take sort of credit for when things are going well, but also to sort of avoid any of that, blame when they're not. I think we would characterize this economy, this sort of K-shaped, two-speed economy is quite real. Where if you just look at the components of GDP, obviously, AI-related CapEx fueled a lot of growth last year, as did the high-end consumer. I think there is a hope in 2026, and again, this is what I think Republicans are banking on, that the breadth of that economic growth is broader, and that this sort of the consumer at the kind of middle to lower end starts feeling better about things and starts participating in the economy. But if the economy just is predicated on kind of AI-related CapEx and the high-end consumer, that makes for a relatively fragile economy. And if you sort of see any kind of wobbles in the labor market, for instance, that could have maybe a non-linear impact. So, I think it's a stronger economy. It's been a resilient economy for sure.
Right.
But again, I think Republicans are hoping that you can sort of broaden out the source of that growth, and that they'll actually be rewarded then, come November.
But that AI spend, the impact on the market, sending it higher, and then, the wealth created among affluent spenders, that is something that Greg Dacco has certainly talked about a lot for us from EY Parthenon, and the importance. And if that starts to come undone, that could be problematic, Tim.
Hey, Libby, I want to shift gears a little bit and talk geopolitics, because ahead of the speech, the president, and he's gotten quite a bit of criticism in recent months, even from within his own party, about focusing too much on geopolitics. And while he didn't talk too much about geopolitics, what he did frame last night was, Venezuela and the ouster of Maduro, that being a win for oil companies and Americans who are getting oil and will get oil from Venezuela. And just now we are learning that Cuba has shot 4 dead in a clash with a Florida speedboat. That's just breaking news just in the last few minutes. I'm wondering about geopolitics, though, and the political risk for a president who came in and said, no more on a platform, no more foreign wars, wants to end wars, for focusing so much on geopolitics within his first year in office. Is that alienating some of his base?
I think it's confused some of his base for sure. As you said, that there is a wing of the sort of Trump base that, is more isolationist. I think those folks thought that, President Trump would be sharing in that view. He obviously, talked about ending the war in Ukraine. That has not happened. He's talked about, bringing kind of peace globally. I think you could sort of quibble about whether that has actually been true or not. And then to your point, he has focused on, some of these more specific operations. Now, I think, Venezuela, the way that they would characterize, the White House would characterize this is an extradition, kind of a high-profile arrest, if you will, that required a lot of resources of the U.S. government, but was quite different from regime change. We'll see kind of how that plays out. But I do think, Tim, you're right to sort of focus on this politically because midterms are all about turnout. It's not about persuasion, right? You need to get your base turned out. You need them to get excited. Whereas a general election, it's about sort of persuading folks who might be kind of on the fence. Again, midterms all about kind of your base turnout. And if your base is at all, feeling maybe a little bit less enthusiastic about you, they may not turn out. And so I do think this, we'll sort of see how this kind of movie plays out, but you could see President Trump, maybe kind of be forced by his own party to be less focused on these issues because they just doesn't have sort of the galvanizing effect as the kitchen table, gas and grocery issues you typically have. The last thing I'll just say though is I think President Trump was quite clear about what his framework was he was using yesterday as it relates to Iran. He definitely did not close the door on potential intervention. He also didn't necessarily endorse that he was going to do this either. So he was using sort of this clear framework about about Iran's ability to develop a nuclear weapon and what have you as kind of a litmus test. So I think he's trying to be more clear about what it would require to engage. But again, politically, he may be forced to back off this as we get closer to the midterms.
Libby, going back to the affordability issues, we know President Trump and Vice President J.D. Vance are hitting the road tomorrow and I believe on Friday to kind of test their affordability message with voters in Texas and Wisconsin this week. So things like, obviously the tax cuts that are already part of his big, beautiful bill, these new savings accounts for kids, maybe banning of institutional investors from buying homes, although we didn't get anything more on that. Are there policies or clarifications of policies or implementation of policies that are likely to come leading up to the midterms that you think kind of improve the affordability issues for those who will be voting?
I think the reality is that even if President Trump wants to see some changes, it's going to be very difficult for Congress to get anything done before the summer, which is really the de facto end of this Congress. That's when they will adjourn for their sort of summer, traditional summer recess, for them to really go back to their districts and to campaign. So in terms of the runway to actually effectuate policy, we are talking about a very short one, to July, basically, and we don't see Congress moving. We don't see them passing another tax bill, another spending bill, another bill that prevents institutional investors from buying single-family homes or what have you. There is a housing bill that they may be able to pass both chambers and get signed into law, but that is likely going to be it. So I think kind of for all intents and purposes here, Trump will have to lean on those policies he can effectuate unilaterally, which is the agencies buying, agency MBS. That is one thing that he did not talk about in his speech. It's kind of for us, bond nerds over here. But we do think that's actually, that and deregulation, those are two things that he can and will, we think, continue to lean on to help improve at least mortgage rates and sort of the rate environment in general, and hope that will actually trickle down to some kind of the perception again of affordability among voters. But outside of that, we do not expect Congress to move, really, period, between now and the midterms.
All right.
I don't recall seeing mentions of agency MBSs on the prediction markets.
Wait, that's
yesterday.
when they all stood up. Remember?
Okay.
They like the...
Exactly. The only bipartisan moment we saw was at our agency MBS.
Bringing the parties together. Libby Cantrill, you rock. Managing Director,
so
Head of Public Policy over at Pimco, joining us right here in New York City. Don't forget to catch our weekend show, Bloomberg This Weekend. David Gora, Christina Ruffini, Lisa Matteo bring you unique conversations on politics, policy, and so much more, lifestyle, culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app. Catch it Saturdays and Sundays starting at 7 a.m. Eastern. Yeah, it's nothing like mortgage bonds or bring the
someone who gets
together.
excited about mortgage bonds is Charlie Pellet. He's standing by at the Bloomberg Businessweek studio.
Of course
He's also
he does.
watching markets. Hey, Charlie.
Without a doubt. Absolutely watching markets. Nvidia after the bell. Got to begin, though, with fast-moving developments. Here's the latest on the situation with Cuba. We brought you headlines moments ago, but Cuba's government says its forces have killed 4 people and wounded 6 others who were traveling in a speedboat with Florida tags and opened fire on the island's border patrol. Now, the Cuban Ministry of the Interior says that vessel did approach within 1 nautical mile off the coast of Villa Clara. U.S. and Cuban tensions are running high as President Trump's administration has effectively imposed a naval blockade on the communist-run island and dramatically reduced its access to fuel. Again, developing story. We will have more details as they become available right here on Bloomberg Businessweek. The other story we're keeping an eye on, CME has now restarted natural gas futures after a glitch halted trading. That halt lasted about 35 minutes, also affected trading in metals on CME's Globex platform. Stocks are pushing higher. In fact, we are just about the best level of the day right now on the S&P. All of this ahead of Nvidia. S&P right now up 0.8%. The Dow up 0.6. The Nasdaq Composite Index up 1.3%. The Nasdaq 100 Index up 1.4%. The VIX is at 18. 10-year yield 4.04%. Gold is surging 1.1%. 52.02 the ounce. West Texas Intermediate crude little change, 65.63 a barrel, unchanged right now. Bitcoin, though, major story. It is up 7.5%. Bitcoin at 68,882. Again, Nvidia after the bell. Nvidia shares up 2.2%. Also reporting after the bell, Salesforce up by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Shares of MercadoLibre having their biggest intraday drop since 2024, down about 14% intraday after fourth quarter net income missed analyst estimates as the company continued to invest heavily in its main business lines. Now, I should point out, analysts are broadly positive on the growth trends at the company. They did note that elevated spending will pressure the company's margins. Meantime, our own in-house Bloomberg Intelligence analyst, Poonam Goyal, she follows the company. She pointed out that AI is a catalyst, helping spur ad sales and acquire business, and singled out Mercado Pago, I hope I'm saying it correctly, Pago AI assistant. So let's get into it all and look at the quarter in the business. It's so great to have back with us Martin de los Santos. He's CFO of the e-commerce firm MercadoLibre, and he joins us from Montevideo, Uruguay. And it is great to have you back. How are you? And talk to us a little bit about business.
Thank you, Carol. Thank you for having me. It's a pleasure seeing you again. As we mentioned yesterday on earnings report, we are very excited about the growth that we are delivering in all of our businesses. You mentioned advertising that has been helped by AI, growing at 70% year on year. Our e-commerce business, in particular in Brazil and Mexico, growing 35% year on year and growing market share. The same thing with Mercado Pago, our fintech platform, which is also growing very rapidly in a region where financial inclusion is very, very low. So the opportunities ahead are tremendous, and the results that we deliver in Q4 and in 2025 makes us very, very excited, despite the fact that we are conscious that we're making investments that put some margin pressure in the short term.
Well, you have a great view of the consumer, given where you sell and what you sell. If you were to characterize consumers differently in different parts of the market, different parts of the world that you sell in, how would you characterize the consumer?
I think if you compare the consumer behavior in Latin America relative to more developed countries, I think we're behind in terms of adoption of e-commerce, and this represents an opportunity to us. Penetration of e-commerce is only 15% in Latin America. It's half the penetration than the US. Also, there are some barriers to that. Payments, logistics is more complicated. So we have built our own logistic infrastructure. We build our own payment methods. So we have built a platform that is enabling people to to move online. So I think those are the main differences. At the end of the day, we sell everything in MercadoLibre. And what we're doing is we're trying to move people online and create a market.
So your sales did beat fourth quarter expectations. We were just talking about some of the numbers with you. 45% year-on-year increase in net revenue, $8.8 billion, driven by customers taking advantage of free shipping perks and credit offerings. I am curious about these momentum drivers, whether they continue, and I'm really interested about the credit offerings. Does it show, Martin, strength of the consumer or a consumer who needs to be buying more on credit?
Yeah, let me first talk about the growth opportunity that you mentioned. We delivered 45% year-on-year growth. This is the 28th consecutive quarter in which we deliver more than 30% year-on-year growth in terms of revenue. So growth has been consistent. And when we look ahead of us, because of the large opportunity that we see in Latin America, it will continue to be there. And this is the reason why we are investing behind growth. And in terms of credits, Latin America is a market where it's very much underdeveloped in terms of penetration of credit. If you look at Mexico, for example, fewer than 15% of people have a credit card. So what we're doing is we're bringing products to them that will include them in the financial system. And they also help our ecosystem, because when people pick up the credit card for the first time, they tend to buy more on MercadoLibre. So it is very synergistic. But at the end of the day, what we're doing is we're doing financial inclusion, and we have the objective of becoming the largest digital bank in Latin America, and we're working towards that.
Martin, you mentioned when we were just a few moments ago the penetration in Latin America of e-commerce and how it's half of what it is here in the United States. So there's a lot of opportunity. There's a lot of runway for your company. What's a good way to think about the progression over the next few years? Like, how does that increase in 1 year, 3 year, 5 years from now? What's a good goal for investors to have an understanding of?
I think a couple of ways of looking at it. I think the penetration of e-commerce, there's no reason why it shouldn't reach the levels of China, north of 30%. So that's double the penetration that we have today. Also, if you look at the number of buyers, we have 120 million buyers in our platform in a region of 600 million. Of course, we're growing at 26% year on year, the number of users. But as we continue investing and improving the user experience, that should continue to deliver growth. So we see plenty of runway for growth ahead of us in commerce. And the same thing could be said about fintech.
But when? Like, if you were to give a timeline for when that would happen, when would different Latin American markets reach what China has experienced?
I think it's a matter of, it's hard to put a timeline. I mean, we've seen a lot of acceleration since pandemic in terms of penetration of e-commerce. Yeah. And if we continue the trend, I think we should be able to get to the levels of where China or the US are today, maybe 5 to 7 years. Okay. But then we should continue to increase that penetration as well going forward.
Hey, one of the things I want to go back to, and I think you touched on this, but it's part of why we're seeing a negative stock reaction, and that is the substantial investments that you guys are making in e-commerce and the fintech unit. Analysts say that it's necessary. You got to make these investments in order to bring about future growth. So on that, because investors are questioning it, certainly in the trade today, Martin, how should we think about the run rate here?
Yeah, let me give you an example to make it more tangible what we're doing, right? We lowered our free shipping threshold in Brazil, and that was not the first time that we did it. We did it several times since 2017. And that's a way to enable more people to come online. You know, shipping cost is one of the main frictions for people to come online. So when we did that, we did put pressure on margins in the short term, and we're conscious of that. But we have also seen very important metrics in terms of growth. You know, increased number of users. We accelerated items sold from 26% year on year to 46%. We see more users coming to the platform with more engagement. They tend to buy more things on MercadoLibre. So all the metrics are pointing in the right direction. And this is the way to go, in particular, if you consider the relatively early stages of development of e-commerce in Latin America. So we think, again, when we try to optimize long-term margins as opposed to short-term margins, and we're very confident that the investments that we're doing in commerce in this case will help us to achieve that goal.
But will it be a drag on margins for a couple more quarters? Like, do you have a good feel on how long that continues to be maybe an issue? Because obviously investors see it as an issue today.
Yeah, of course. I have been consistent to the market saying that our main objective is to capture the large opportunity ahead of us, and we will not hesitate to invest to capture that opportunity. We have a long track record of investment with cautious and very prudently, and we are expecting returns on those investments but in the long term. So if we see more opportunities to invest in 1P, cross-border trade, expanding the free shipping offering, the credit card, we will continue to do so because we think it's the right way to go in terms of expanding and maintaining a leadership position in both commerce and fintech.
Well, on that, marketing expenses, they rise when you're trying to increase demand. If you think about churn or like if you reach a new customer, the cost of acquisition of that customer, how long does that customer stick around after using the service? And how do you make sure that you don't have to keep spending to entice them to come in?
That's a great question. This particular quarter, last year actually, we increased the level of investment in advertising, and the cohorts that we incorporated in 2025 perform a lot better than the previous cohorts because they come and they find an ecosystem that works better, that has more free shipping, better financing alternatives, better assortments. So all the metrics that we measure in terms of retention and engagement of users that come through our advertising investments are improving year over year, and that gives us confidence to increase investments like we did in this particular year.
I don't know if this is a crazy question, but I want to ask you before we wrap up.
You talked about this earlier on the call today.
Well, what's been going on in Mexico, and the taking out of the cartel chief, and what I guess we kind of continue to watch this
disruptions at airports.
Exactly. Is any of that? Are you seeing that show up in any way in terms of consumers from Mexico?
Well, obviously, we are monitoring the situation very closely to make sure that our employees and our customers and partners are safe, given the recent events. We have not seen any disturbance on events, but we're monitoring the situation and close contact with authorities to make sure that we don't get any disruption.
All right. We're going to leave it on that note. So appreciate that you addressed that as well. Martin, thank you so much. Really appreciate the time today. Martin de los Santos, he is the Chief Financial Officer of the e-commerce firm and Latin America's most valuable company by market cap. We've seen certainly that trade play out, MercadoLibre. And we should point out the ticker and the stock down about 14% year to date. It gained about 18% last year.
Hey, I do want to bring an update to a story that we've been following all hour. Cuban forces killed 4 people and wounded 6 others who were traveling in a speedboat with Florida tags after they opened fire on the island's border patrol. The occupants of the vessel opened fire on security forces, injuring the commander of the military vessel when approached to identify the passengers. Now, the Interior Ministry said Cuba reaffirms its commitment to protecting its territorial waters based on the principle that national defense is a fundamental pillar of the Cuban state. We
should remind everybody that U.S. and Cuban tensions definitely running high as President Trump's administration effectively has imposed a naval blockade on the communist-run island and dramatically reduced its access to fuel that came off of the actions in Venezuela. Now, the president has also mused about the collapse of this 6-decade-old regime. The U.S. State Department did not immediately respond to a request for comment, so we are awaiting some kind of comment, perhaps, from the U.S. government.